What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. Today, my guest is the CEO of Coinflex, Mark David Lamb. Mark is the one who actually taught me what Bitcoin is. He started buying Bitcoin at $8. Today, we talked about his company, Coinflex, a new token he created called Note Token. Talked about DeFi, Decentralized Exchanges, and had a great conversation on Ethereum. He explains what it is and why so many people out there are actually using Ethereum. After hearing Mark talk about Ethereum today, I'm actually more bullish Ethereum than I am Bitcoin. Futures Radio Show is sponsored by CME Group. They are the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. You can listen to Futures Radio Show podcast anywhere podcasts are available. But if you want to watch Futures Radio Show, you can check us out on YouTube and my website, anthonycrudele.com. Futures Radio Show is also sponsored by Trading Technologies, TradeStation, and FTSE Russell. The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 futures symbol RTY and Micro E-Mini Russell 2000 futures symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. Mark, welcome back to the show, my friend.
Great to be here, man. Good to be on the show.
You know, I was looking at the last time you and I were on together. Well, I think it was just a few years ago, but the first time you were on the show was 4 years ago, and you were one of the first people to really explain Bitcoin to me. You remember when you and I were in London and we had just met?
Yep.
Yeah, and then it was TT that introduced us. It was Brian Mehta. And I remember just sitting down and I was just so impressed with you. I mean, nobody explained Bitcoin to me better than you, and just your story was awesome. It's an old podcast, everybody. That, like I said, it's about 4 years old. You can go and check out to listen to his story. It's very interesting. You took to crypto at a very young age. And what I was so impressed with you back then was just your understanding of crypto. We talked mostly about Bitcoin at that point in time. Obviously, things have changed a lot in the crypto space, but just you creating ways for people to trade, and you totally understanding the whole, really the ecosystem of it. You know, it's not just a coin. You understanding the whole ecosystem of it. And I know now you currently have Coinflex, and we're going to talk about some of the things you've got going on there today. But first, explain to everybody what Coinflex is.
So Coinflex is a futures exchange in the crypto space, and we have perpetual futures, which are kind of a very short-dated, rolling futures contract, monthly futures and quarterly futures going out all the way till the end of 21. And we have these on over 30 different coins, and we also have spot pairs. So we have a bunch of different markets. We have our own exchange token, FlexCoin, which is used to pay the fees on Coinflex, and we are the only exchange to do a physically delivered futures contracts, physical perps, and physical quarterlies. So, yeah.
And you're located in Hong Kong now, right?
I'm in Hong Kong. Yeah, exactly.
What is this U.S. based exchange, Coinflex? Obviously,
no.
You're in Hong Kong. I'm assuming it's based there.
Yeah, so we're incorporated in Seychelles. Much of the team is in Hong Kong, and we're really a global exchange. But yeah, we're not U.S. focused, and we don't take U.S. based customers.
Got it. It's something that you guys recently started was called a Note Token, and I'll be honest with you, I didn't understand it at first. I was reading the information on it. Somebody sent it to me and said, Anthony, look at futures and crypto now. They're not the same, but so many futures traders that I know, myself included, I was trading crypto today. I was trading Ethereum. Wow, that was a move. Talk about that maybe later. But what you're doing with this Note token, I think it was so interesting, and I couldn't wrap my head around it that I actually had to call you and say, look, we needed to do a show on this, because I get it, but I don't totally get it. And I think that this
Yeah.
is something that's, once again, I think you're changing the industry. I think it's going to impact, all types of exchanges, futures, crypto. Explain to everybody what no token is.
Yeah, so node tokens are really a way for multiple parties to all make money together. But ultimately, prop trading firms have always needed more capital. And if you think about prop trading, where there's an owner that's directly directing employees and traders and hiring young folks to trade. Usually, it's 100% owned business by often the people who are trading themselves. And this type of situation is one where there's inherent capital scalability problems because it's not a hedge fund structure. It's not something where you're raising LP money, and because you're not raising these external funds, the only way to grow is through profits or through borrowing money. And so prop firms have always looked to borrow money, but they've not been able to borrow money from the general public. And so what note tokens are is a way for prop firms that are trading on Coinflex to borrow money from the general public. And we're using something called a promissory note, which is a form of loan. And it's one that in almost every country in the world is exempt from being a security. A short dated promissory note is exempt from securities regulations. So basically, this is an instrument that's been used in law. Promissory notes back in the 1800s and before then were actually used as money. So you'd have guilds and merchants and businesses that would issue promissory notes, and they would circulate around the economy as money. And we're tokenizing these loans because our view is there's a lot of lending that's happening in crypto right now to these trading firms. And it's mostly done in a non-transparent way, and it's done without the customers of these lending desks knowing that it's being done. And so what we're trying to do is we're trying to take this business, scale it to much bigger than it is right now, and do it in a very, very transparent way. So the users know exactly who they're getting the risk of. They're getting the risk of this trading firm or that trading firm. And we also, by being an exchange, we have the ability to add a kicker to the note or a kicker to the loan that makes it much more lucrative. So we can give a 30% rebate of the trading fees paid by that firm to the token holders. So right now we've been issuing a lot of these notes at around 8 or 9%. But if you count in the fees on top for some of these high frequency kind of active algorithmically trading market making firms, that 30% can be worth even more than the 8% interest rate on the actual loan itself. So it's really it's a loan, but it's traded on Coinflex on our markets, and it's tokenized on the Ethereum blockchain and the Bitcoin Cash blockchain. And so it becomes this instrument that can be transported around on the blockchain and then used in decentralized finance and traded that way.
Took down a bunch of notes here. We got, like I said, I get this, but I don't totally get it, and I'm sure people listening to this are interested in it. And let's pull some more of these little details out of it. So the first thing I wrote down was that 30%. So basically, well, let's go backwards. I want to get to that, but I think when you have what you have here is let's go over an example. I think that's probably the easiest way to do it. So a note token. Let's just say, could I just put $100,000 in and create one of those note tokens, and then somebody would how would that work? I mean, take us through that whole process.
Sure. So we don't do these for individuals. They're corporates only, and they have to have some sort of track record, financial P&L that they've shared with us around their trading history. Usually the businesses we're doing these for right now have been around for several years and have either been very successful with a small amount of money or kind of been moderately successful with a large amount of money. And they're consistently earning P&L. So we're looking for basically market making style businesses where they've developed some edge, they're running with it, and they're doing something that's very consistent, very safe. and obviously the great thing is if it's a strategy that can scale, but we don't know the ins and outs of their strategies. We just know their financial data. And they have to be active on Coinflex. So they have to be quoting two-way markets on Coinflex. And that's one of the things where anyone can look at their financials, any lender can look at their financials. We can actually analyze their trades. And so we can say, oh yeah, this person's been running algorithms that are quoting 24/7. They're in the market all the time. They're constantly churning positions. They're doing things that are high volume and kind of low risk. And right now, our metrics are relatively, at the moderate level, but we're going to be developing those over time, so we can say, oh yeah, based on the trading patterns, this is like a very, very low risk firm, or this is a firm that takes some risk, but they've got huge balance sheet backing it and whatnot. But ultimately, these are all Coinflex customers, corporate customers that are professionals that are, they're not hobbyists, they're not directionally gambling. They're looking to do this as a market making business.
So they have to be trading through Coinflex. They have to be a company. It can't be a big individual trader that wants to put one out there for other traders to be able to basically get backed from it in a sense. It sounds a lot to me like a bond.
It's similar in many ways to a bond in that it's a tradable loan instrument. But the key difference here is that these are promissory notes. And so what that means is it's not a security. There's a few key differences there, but mostly it's a duration factor. So these are 30-day notes. And if the token holders hold them through that 30 days, it auto rolls the next 30 days. So it's very suited to trading firms, because if you think about a trading firm, there's very few public company trading firms. It does not make a lot of sense as a prop firm, even a 500 person prop firm. In Chicago, I mean, you guys see lots of 1,000 people trading firms or 500 plus people trading firms now, and it's a big business. Why don't they go public? Well, they don't go public because you'd have to share all this information. And so there's a lot of downsides to going public. There's a lot of upsides to being a private company. And as a private company, you can issue promissory notes. You can write a promissory note and promise to pay back a lender. And these things are not securities. And so what we've done is we've tokenized that promise, we've tokenized that loan, and we've said, now let's transform it into something that anyone can buy and also take off the platform, take off of Coinflex, and trade on the Ethereum blockchain in DeFi. So, it's not just it goes from being something that is just something that you own the cash flows of and that you're hoping to hold to maturity, to something that you can actually profit from the price changes, profit from demand and supply in these notes, and also get security, knowing that there's liquidity. So if you are doing a 30-day loan to just a private loan via a legal agreement, you don't actually have liquidity. You have to hold it for 30 days. You're stuck. If you have a 30-day loan and all of a sudden you need to come up with some cash, tough. But if you have a 30-day loan that's tokenized on the Ethereum blockchain and is being traded actively in DeFi, all of a sudden you need to come up with some cash, just sell the loan and sell it on the DEX that we've launched, which is DEX stands for Decentralized Exchange. And we've created a place to trade these loan notes on notes.finance. That's the URL of this DEX. And so that becomes this place where people can then lend for these 30-day rolling periods of time, but they know that they can have the liquidity intraday to get out as well.
Traders, we're going to pause for 30 seconds and we'll be right back.
Get S&P 500 and NASDAQ 100 by the slice. Just 1/10 of the pie. Trade the tastiest index futures, micro E-Mini options with TradeStation. Get a piece of the pie now.
Trade the global markets with Trading Technologies. TT is the world's fastest commercially available futures trading platform, now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tryttnow.com. way above my pay grade, man. This is why I like talking to you. You're always challenging my brain, man. This is it's hard to wrap my head around it. I think initially what I was thinking it was like was basically somebody goes out and puts some money into a token, and then people can then use that token to trade. It's almost like backing traders in a sense. That's
Yeah,
kind of what I thought it was like, and what you're
it's
explaining
similar
to
to
me
that.
now.
Yeah.
What you're explaining to me now, and I'm getting it more and more, is really you have to be on Coinflex, you have to be a company. Promissory notes, I mean, it's a promise to pay back, and you're looking at these firms, and you guys are looking at a lot of it, because you're seeing them trade on your platform. So a lot of it is you're
Yeah.
going off of reputation. I mean,
Yeah.
sounds to me what it's like, right? It's reputation.
Yeah, exactly. And our view is that if we become the de facto place to borrow, lots of firms will actually come to Coinflex because they think that if they trade for a few months or if they trade for a few weeks here as a market maker, and they show what they need to show in terms of financials and documents, they might be able to borrow. And so we want to be
Got
the
it.
biggest exchange in the world. And we know that fixed income is the biggest market in the world. And so, there's so many investors, when you think about it, there's so many investors that are hungry for yield right now. Um, and these prop firms are actually low risk, but don't have access to lots of capital. So there's an arb in the market where many of these firms, even the small ones, the 5-man teams, the 4-man companies, are actually very low risk. And if you think about a diversified group of note tokens as a whole, it's pretty low risk. And with the fixed yield plus the 30%, you're getting a pretty good pay grade, where you're probably going to make over 10% annualized on these notes. And if you put them into DeFi, you might make over 100%. The farming rewards of kind of providing liquidity in these notes and effectively acting as a market maker in the notes, it's very easy to do. With Ethereum, it's a few clicks. You have to use MetaMask and the tools of Ethereum, but in a few clicks, anyone can buy the notes and provide liquidity in them on Ethereum blockchain, and those yields will be over 100%. That kind of reward program just launched last night, and it's already paying extremely high interest rates on the amount outstanding right now. So it's really a process of taking something that is done in financial markets, and making it available to private companies, and making the investment of this available for not just high net worths and millionaires, but anyone. Anyone can invest in these things. Anyone can provide liquidity in these things in a decentralized way. And that should change finance, because this is a whole industry, crypto market makers, that does not have access to lots of capital. And if we can scale up the access of these guys to capital, if we can provide them billions of dollars in liquidity, they'll just make crypto markets more liquid, and that's a win-win for everyone.
I totally get why you did this. I mean, I'm learning more and more on the fly here. And a couple things I think listeners, I know some crypto traders that are listening to this probably totally get it. I think there's a lot of futures traders listening to this that aren't totally understanding it. First of all, you're explaining DeFi. DeFi
Yeah.
is that your decentralized exchange, correct?
That is, so our exchange is called nodes.finance, and that's
Okay.
that's the URL of the exchange. So you just type that into your browser and you'll get there. But DeFi is really powerful in that instead of a company providing an exchange, or instead of a company providing a loaning service or all sorts of financial services,
Okay.
the Ethereum blockchain itself is providing it. So we and other programmers around the world have written code that allows people to trade tokens without an exchange, without a central clearinghouse, without an order book. And it becomes something where you're actually interacting directly with an Ethereum smart contract. So the exposure you have is this Ethereum smart contract. And so what we've done is we've plugged into one of these protocols. It's called the Curve protocol, CURV. And no. Anyway, we've allowed people to plug in these note tokens into this protocol and basically access this automated market maker system where they just plug their assets in and it shows prices, two-way prices on their behalf to anyone on the Ethereum network. So now anyone on the Ethereum network that's looking to get yield can see these tokens and say, oh yeah, maybe I want to buy a grapefruit trading note token or an efficient frontier note token, which are two of the trading firms that are borrowing via this mechanism today. And they say, maybe I'll check out these firms. Okay, yeah, they've been around for a while. They've been trading on Coinflex for a while. I'll buy the note tokens and I'll start providing liquidity. And then anyone can do that. And because anyone can do that, it changes the game from being something that only people with Coinflex accounts can access to something that anyone on the Ethereum blockchain can access.
Yeah, no, that makes sense. Now it's, once again, like I said, I'm a slow learner of this, and it's something that, this is why I've always said when I talk to you, it's a process. I think for many people, this is so new. And even me, 20 plus years in the derivatives industry, you just try to wrap your brain around how all this works. And, guys like you coming up with things like this, my mind just starts racing and thinking about how many things can change, not just in trading. I mean, in loans and just all sorts of different things. I want to go to Ethereum. I talked about it a little bit at the beginning of the day today. I trade Ethereum pretty regularly. I trade that more than Bitcoin. And I just think it's a good day traders market. Today we're recording on February 22nd and had a big move down. I actually, was getting along a little bit, and luckily I squeezed out for pretty much a scratch today after what I had saw that big move down. I mean, it was like, I don't think it was like $300 down. I remember I got filled in a couple of them. I'm going, what the hell's going on? Saying, it came back up and whatever. I'm not going to hear to talk about my trading, but Ethereum. They just started a futures contract at CME Group. I said I think it's going to be a big contract. I want people to know more about it. You talk about how you're actually using it with everything that you're talking about today. Explain to everybody what Ethereum is and why this is really, with all the people I talk to in crypto, this is really the crypto of choice to do a lot of the things that you're talking about. Yeah.
So if you think about Bitcoin is a smart contract platform, Bitcoin is a blockchain that's kind of limited in terms of what it can do smart contract wise. Ethereum is like a computer. Bitcoin is like payments. It can process payments, and it can kind of, people always tout it as a store of value and an alternative to gold. But Ethereum is all about utility. It's all about kind of building out a crypto economy on it. And so Ethereum is this, Vitalik Buterin, who's someone I kind of knew in 2012, and he was kind of the most active writer on the Bitcoin magazine. He basically created this cryptocurrency because he saw the limitations of Bitcoin, and he said, okay, this is something we can create, a new blockchain that has a lot more capabilities. And so what he made is really something where you can have if this, then that functions on a cryptocurrency. So if this transaction happens, then that transaction happens. If this state happens, then do that. And rather than just have, I send money to you, or a group of me sends money to a few other people, you kind of create this functionality for very, very rich smart contracts. And what that is really code that lives on the blockchain and says, okay, I'm going to facilitate exchange between two people, or I'm going to run a chess game. And so initially you had lots of people building all sorts of applications. Some of them were literally chess games. And many of them didn't really catch on, but the financial ones did, because people in crypto really like trading. They like experimenting. And what happened is you saw the creation of these things called Erc20 tokens. which are basically tokens on the Ethereum network. So rather than ETH, the Ethereum token, which is the native token of Ethereum that you have to use to pay gas, pay for transactions on the network, pay for running a smart contract. You can also create these other tokens. And so these other tokens might represent dollars. That's what you have with stablecoins. And Coinflex has our own stablecoin, FlexUSD, that actually pays interest on the blockchain, and it pays 26% interest, and you can redeem it for dollars anytime. 26 is the rate right now. It changes every day. But the cool thing is you can create these tokens, and they can represent real world value, or they can just be random tokens as well. And once you have the tokens exist, you can create exchanges for the tokens, where rather than waiting for a Coinflex to list your token, and we might wait until the token gets pretty big, as I said, we only have about 30 or so tokens because we're focusing on stuff that you can create futures on. But in the Ethereum smart contract land, anything can become a pair simply on these decentralized exchanges. And so what these decentralized exchanges are is basically a place where user A and user B can trade with each other without anyone controlling that interaction. And Uniswap was the first to really master this, where they created a protocol that effectively has a market maker in it. And users can invest in that market maker. And that market maker is a very effectively dumb program. It just says, how much of asset A do I have and how much of asset B do I have? And it might be wrapped Bitcoin against USDC, which is a stable coin, or ETH against USDC. And as people buy from it, it just backs off its offers and moves up its bids. And as people sell into it, it does the same thing. And even though it charges a decently wide spread, it became something that people wanted to trade on because any pair could list. So you could list any token on this thing without getting approval or agreement from the exchanges. And so all of a sudden, more than 1,000 tokens listed on Uniswap. And Coinflex has created the same thing. We're part of the Curve.fi ecosystem, but we've created the same thing, the same kind of decentralized exchange, where instead of the assets being Bitcoin or Ethereum, the assets are note tokens. So these loans are actually tokenized on the Ethereum blockchain, and then they're put onto our DEX and traded in a decentralized manner. And the cool thing about it is really it opens up access. So, rather than getting an account at a new exchange, which you might not know, you might not trust, you might not want to sign up for a 10th account at an exchange, you can just plug in your Ethereum wallet, any Ethereum wallet, into a DEX and use the DEX directly. And that user experience for many people in the Ethereum ecosystem is why they love it, because rather than knowing the sign-up processes, rather than, oh my gosh, are they going to freeze my account? Do I have a compliance problem? Do I have to do KYC? How long is the KYC process going to take? Several days? Oh my gosh, the trade might be gone by then. You're immediately in. And so there's no sign-up process. And so that removal of sign-up process massively removes friction. And that's why Ethereum is such a massively active ecosystem, where now you have Uniswap trading on some days more than Coinbase. And that's
really
all. Yeah, Uniswap is many days trading more volume than Coinbase. And so it started off as this thing that was, oh yeah, people like it because it lists anything and there's no restrictions on tokens. Oh, and then people started liking it because you don't have to sign up. And now it's like, well, for a bunch of different reasons, there's $2 billion plus staked on Uniswap of assets, people that want to market make without being market makers, without running algorithms, and they want to collect fees and collect spread without knowing how to do that. And do they have risk? Yeah, they have risk. They could lose money. They're all risking their capital, but they can't market make algorithmically because they don't know how to program. They don't know how to do that. So it opens up market making to the world. Anyone can now do that with automated market making in Uniswap. It opens up trading rather than being something that you have to have an account on and you can get KYC blocked or compliance blocked on. And it opens up assets. If you're someone that wants to launch your own token, or if you're someone that wants to trade a new token just the day of the day of launch, you no longer have to wait for an exchange to that you kiss up to and you do all these things to, and eventually your token gets listed. And I know people want to do that because people are trying to kiss up to me every single day and try to get their token listed. And you can do that, but just go to Uniswap.
This just makes me so much more bullish Ethereum than Bitcoin. Yeah. It really does, because utility, use. I keep going back to why do I own Bitcoin? Yeah. I own Bitcoin purely because of speculation. I've talked about it on this show that I think it's it's the hedge against central banks. You could call it that, but I think that obviously a majority of the price action in Bitcoin these days is speculation. What goes up keeps going up, right? Until
all of it.
It is what it is. But I just look at it and go, how much capital can I allocate to Bitcoin? Because what am I going to do with it? It keeps going up. Eventually I turn them into dollars again. But the big money people that are actually utilizing a crypto, it's in Ethereum.
It's all in Ethereum. That might change. That might change, but it is all in Ethereum today. So I completely agree with everything you just said. And what I look at as well is, who are the people that don't think in crypto terms? They're not crypto people. They're not looking to hedge inflation. They're literally just looking to make money in the space. What are they buying? And they're buying Ethereum because they spend gas fees on it every day. And so they know, so there's a lot of these gas tracker sites. And by gas, I just mean you have to spend Ethereum to use the Ethereum network. Exactly. You have to spend Ethereum to transact and to do smart contract interactions. And there are some people that spend $10,000 a day in fees, and
they have some of those Ethereum to pay them.
And some of those people are very wealthy people, but some of them are literally just doing lots and lots of transactions, and they're making $20,000 in P&L or $11,000 in P&L, and $10,000 in fees. And so when you think about that, those guys are buying Ethereum and then spending it, and tomorrow they'll be buying Ethereum and then spending it. And
why the hell did I get spooked out of my Ethereum this morning?
I mean, I don't know. I think it's going to be a very powerful thing where over time, crypto needs to build a native ecosystem around it and inside of it. And some of it has to be intra crypto things where it is based on kind of the speculation about the crypto market, but some of it also has to be based on the kind of real world economy things. And the cool thing about Ethereum is it actually has the potential to really house a lot of that interaction and a lot of that activity on it. So it's really, I'm very excited about Ethereum. It's got huge scaling problems. It's got, fee problems. It's very expensive to use right now, but it is very, very capable. And there's a huge amount of activity going on right now. Definitely the vast majority of activity in crypto is in Ethereum today.
Yeah, it's so interesting to me. I've known that, but hearing you talk about today, the reasons why, once again, it's a refresher. It's why I like catching up with you. Some of the things you think you know, you don't, and then you really came in and explained a lot of things to me today. I mean, I know that you don't really comment too much on price action like I talked about today. It's February 22nd when we're recording this. What happened with Ethereum today? I mean, do you have any kind of idea of what happened? I mean, it went down, $400 or something today? Like that. And that's why I was kind of saying at the beginning, I was like, phew, what a day. I mean, it was just it's back up to 1780 as we're recording, but I think it went down to right around 1500.
Yeah.
And I just stepped back because that's the one thing with these cryptos is that I only trade them from the long side. I don't trade them short, But, today when I was buying the dips and just like basically I like to day trade it, and I'll try to hold stuff too. I wish I held it a lot more, but I just was watching the book getting wiped out. And as I was just getting in and out, I'm going, all of a sudden this thing was just melting down. And, that's the one thing when it comes to crypto versus like trading a stock market, if like I was trading Apple a little bit today too, I'm not as worried when that book's getting wiped out. I know Apple's not going anywhere. With Ethereum in the back of my mind, I'm always going, this thing, how fast can it go down? What's going on here? These moves, obviously this is the first time I've seen a move like this since we've been really above like the 1,500 mark. I mean, what's going on right now? Maybe you could share with us what's happening maybe as to why maybe the price action like this is moving like this now.
Yeah, well, I think ultimately crypto is, it used to be a very small market. And so we used to be able to say, well, it's a small market, so when new dollars come in, it has a relatively large impact. Well, now it's not a small market, it's $1 trillion market, right? But relative to the size of what it's trying to accomplish, crypto is a small market. And if you think about crypto, people have always tried to figure out, what do I compare it to gold? Do I compare it to this? Do I compare it to a company? Wow, if I compare it to a company, actually Bitcoin is 800 billion plus, actually this looks like a pretty big company. Well, no, Bitcoin, Ethereum, all these cryptocurrencies are together trying to replace dollars. And they're trying to replace the fiat banking monetary system of central banks and global banks. And they're not trying to replace banks specifically, but central banks and fiat currency, that's what crypto is trying to replace. And if it does that, that's $100 trillion right there. So right now, I've always viewed Bitcoin, since I got in 2012, Bitcoin was $8. I always viewed it as, okay, the target market is around 70, 80 trillion. Now it's obviously 100 trillion. But the target market is fiat. And so we should measure the success of Bitcoin or all of crypto in percentage terms based on what percent it is of fiat. And it's now hit 1%. It's pretty big. People are buying billions of dollars worth rather than millions or hundreds of millions of dollars worth. So Michael Saylor, Elon Musk are buying billions of dollars worth. But there is an issue. Do we deserve the 1%? In the long term, I'm convinced crypto is going to replace fiat. It's going to be a $100 trillion market. But in the short term, have we created an economy that deserves 1% of the market cap of fiat? Have we created an economy that people are spending crypto every day for real world goods and payment for services? I'm not sure. And so that's where the utility versus speculation is often something that speculation just gets ahead of utility. And I think in the long run, I might be, die hard bullish convinced, you cannot convince me that fiat is not going to be replaced by crypto and crypto is not going to be $100 trillion. In the short run, anything can happen. And so what I think we slowly start to see is whales and other participants say, oh yeah, maybe this thing's overpriced, and maybe we got ahead of ourselves. Maybe these new entrants, they were bullish signs, but they are also limited in terms of, Elon Musk bought a 1.5 billion worth of Bitcoin with Tesla. He's not buying 10 billion. He's not buying 15 billion. That's 20 billion. He's got 20 billion in cash, right? He can only put 20 billion into Bitcoin. And so if you have a limited number of people that do these things, it doesn't scale forever. What you need is the Ethereum type of repeat buyers that just, I have to buy Ethereum today because I'm going to use it for fees. I have to buy Bitcoin today, or I have to buy this currency today. I have to buy it tomorrow. I have to buy it the next day. And in fact, I'm not selling it because I'm spending it. And the guy who's receiving it might not be selling it because he might be spending it. And that's how a circular economy is created. And when that happens, people don't need to be thinking about the price in dollars anymore.
Yeah. I know. It's just when you see a 25% move in a day. I mean,
Oh, yeah.
It's like it every time that happens, I know that scares some people out of it. I mean, for me as a trader, of course, I'll step back in, I'll continue to trade it, or, you go to the futures, you work your stop, you know where you're at with it. But, I was just looking at Ethereum, and one of the reasons why I like to trade it versus Bitcoin is because I think the moves are a little bit more predictable. Obviously, today was not one of those days, but, in a sense where it gets down X percentage, or you're looking at it, I use my technicals and whatever. You feel a little bit more insulated in the range, and then all of a sudden you have something like this, and it jars a bunch of people. But it was good. But once again, it's a reminder exactly of what you're saying. I mean, how old is Ethereum? I don't know. Is it 5 years old?
It's about 7. It's about 7 years old. Yeah.
7 years old. So it still is a new.
Yeah.
It's new, and you gotta expect stuff like this along the way, but. Gotta tell you, I always say it, and I'm gonna say it again. I'm just so impressed with you. I mean,
Thanks.
The way that you think is it's just really, like I said, you're always working my brain in overtime. Every time we're done, I'm gonna have to go back and listen to this with a glass of wine and take some notes. And like, it's always fun catching up with you. Tell everybody where they could learn more about Coinflex.
Yeah, so if you go to coinflex.com, that's our exchange. You can access all our products there. And if you go to notes.finance, that's our DEX, and you'll be able to access more and more of our products there over time as well.
Yeah, everybody. I mean, and where can they follow you on Twitter? I know you don't put a ton out on there, but where can people follow you there?
Yeah, so it's Mark David Lamb, Lamb with a B, David, and Mark with a K.
I actually wish you would put some more stuff out on Twitter. You have some great insights, and I think that, I'd like to hear from you more, maybe on social media, of some of the things that you're doing. Because like I said, I learn something every time we talk. And I think what you're doing here, of all the things you've done, and, I've followed you for, been about 4 years now. This to me is, I could tell you're excited about this.
I'm super excited about this, man. Yeah, we're going to be doing a Clubhouse, and we're going to be doing a bunch of things on Twitter soon. So everyone stay posted, and you'll be able to learn a lot more about this, and feel free to PM me on Twitter if you have any questions about any of it.
Yeah, and let me know when you're doing something on Twitter. I'll help get it out there for you. I just signed up for Clubhouse. I haven't used it yet, but I think Clubhouse is going to be the next social media tool that a lot of people will start using. I'm on Clubhouse, everybody. I haven't really even talked about it yet, but I'm going to be starting to use it. I like it. If you don't know what it is, it's basically live podcasting. I don't know what else to explain. It's just audio, right? But it's live.
I agree with that. Yeah.
Is that what it is? Right. Like I said, I haven't used it at all. I signed up to it because Denise Schull sent me a link to do it, and I signed up. And then all of a sudden, I went through it one time, and I was like, okay, I haven't gone back to it yet, but I will. And maybe I'll go back and check it out when you guys are doing it.
Awesome.
Mark, once again, man, thank you so much for joining the Futures Radio Show.
Thanks so much, Anthony. Talk soon.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.